introduction. My name is Mark Littlewood. I'm the Director General of the Institute of Economic Affairs, and I'll be chairing today's proceedings to discuss this excellent new Freedom Association publication, In Defence of the City. Despite the fact that many years have passed since the financial crash, it does seem that banker bashing and a criticism of any sort of practice that goes on in the City of London is still at the top of the political agenda, and a worrying belief that we can forever squeeze the financial services sector of the United Kingdom to pay for virtually everything and anything else that we might want to get in the UK. And I think as well, a fairly dangerous suggestion that we need to rebalance the British economy, apparently away from things that we are good at, like financial services, and towards things that we are not good at, such as making widgets. As Adam Smith will tell us, not just individually, but I think as a nation, you're best to concentrate on the areas of specialisation in which you have a comparative advantage. And financial services is clearly one of those areas. We're going to hear from each of our four speakers for about 5 minutes each. I leave it to each of you gentlemen about whether you wish to speak from the floor or from the podium. That's entirely a matter for you. But let me introduce our panel, all of whom are contributors to this excellent publication, which is available outside. Speaking first is Abhishek Majumdar. He works in the city as a corporate finance professional, has advised clients on a range of transactions, including acquisitions, disposals, flotations and restructurings. He's a Conservative Party member, stood for election to Westminster City Council in 2010. Second up will be Duncan Flynn. Duncan worked as a banking and finance solicitor at a top 20 UK law firm, trained at a leading European law firm based in the City of London, and now works as a public affairs consultant based on Chancery Lane at the very heart of the UK's legal sector. Third will be Anthony Wilkinson. Anthony has over 20 years' experience across the fields of corporate finance, stockbroking and investment management. He's now responsible for advising and managing $1 billion of investors' savings as Chief Investment Officer of the Sustainable Equity Group inside Deutsche Bank's Asset and Wealth Management arm. In 2006, Anthony co-founded Asia's first clean technology public equities fund, which grew to encompass private equity clean tech fund management. He's lived in Asia for much of the past 17 years. And our final speaker is Alex Dean. Alex is a former Chief of Staff to the British Prime Minister David Cameron, now provides counsel and advice to a range of companies and organisations as the Head of Public Affairs at Weber Shandwick, the world's leading public relations firm, counselling businesses and organisations on political affairs, training high-profile individuals and companies to appear before Parliament on a range of issues. He's been an active member of the Conservative Party since 1995 and is also an elected Common Councilman in the City of London, where he serves on the main decision-making body, the Policy and Resources Committee. Please welcome our panel. I'm going to ask each of you to speak for about 5 minutes each. I'm not going to be unbelievably strict on timing, but by 6 minutes I will tap my glass, and after 7 minutes I will continually tap my glass to the great irritation of the speaker and the audience. So if you can try and keep to time, that would be greatly welcome. Abhishek, can we start with you?
Sure, thanks very much for the introduction. I'm Abhishek Majumdar. As has been mentioned, I work in the city as a corporate financier in investment banking, which is neither investing nor banking, so it's more sort of mergers and acquisitions and similar transactions. I suppose two interests to declare from the outset. One is I'm a Conservative Party member, and secondly, I've never taken a penny of taxpayers' bailout money, to my knowledge, so hopefully clean on that front. What I've tried to do in my chapter is lay out a sort of general explanation for what happens in the City of London, which is impossible to do in one chapter, but I've tried to sort of skim the surface and sketch out what happens. I don't know if you're familiar, if any of you are familiar with the sketch show Harry and Paul, with Harry Enfield and Paul Whitehouse. It's quite I find it quite funny. There's one sketch where a couple of city boys go into Dragon's Den, and it's dim-witted city boys, and they're asking for investment in a sort of worthless piece of paper, which they say is worth tens of millions of pounds, and as the bidding goes on, it gets more and more bid up to tens and tens of millions of pounds, and dragons get very excited. So obviously this is comedy and much of an exaggeration, but I think this is actually quite an accurate reflection of what many people think goes on in the City of London. I think a lot of people think that what happens in the city is meaningless, pushing around in bits of paper that are generally just bid up for no reason, and that money is being somehow magicked out of thin air. And I think what I've tried to explain that that's not the case. And I think it goes to a sort of human prejudice of preferring things that are tangible, preferring widgets, preferring hard hats, preferring factories, but in actual fact, what happens in the city, although it's intangible, is a major contributor of value to the British economy. So I've organised what I think are the three major functions of the city in my chapter. And the first is insurance. I think this is an often overlooked part of the City of London, but it's a very important part of the city. It's something that I think has a claim to being the oldest activity in the City of London, and it's an essential part of the economy. And it's basically the city acting as a sort of risk exchange, where risk gets taken away from people that no longer need or want it, and it's being placed with people who do want it, where it's the proper home for that risk, which is with the insurance companies. The second part of the City of London that I've looked at is the capital pool. So all of us are looking for a reasonable return on our investments, and that's especially important in this era of cheap money and low returns. And so that capital is being pooled in the city for the use of businesses that then want to draw on that equity or that debt or other instruments, and can then put that capital to productive use within their own enterprises. So the city is really acting as a conduit through which money from investors is being channeled into productive enterprises. So that's a very important and real part of the City of London's work. And then the third activity is the city as a provider of liquidity. I think this is possibly the most misunderstood aspect of what happens in the city. It's really the sort of the trading part of the City of London, and as we all know, plenty of things are traded in the city, whether it's commodities or interest rates or currencies or shares or debt. And all of those things, through that trading, a process of price discovery is going on. And for an economy, for a free market economy to function properly, you need to have clear and accurate price signals. And what's happening in the city is essentially enhancing that sort of process of price discovery, which enables resources to be allocated. And the other thing that's going on through the liquidity part of the city is enabling individuals who have invested in the company to then exit that investment, which I think is an essential part of being able to invest in companies, being able to know that you're not locked into an obligation for life, you can eventually sell their investments and you can make money down the line. So I think that's another important part of liquidity. And then finally, some historical context. The city is not some sort of aberration that's come from outside Britain that's settled here in the last 20 years. It has become more globalised, of course. It's very different since the Big Bang. But the city has been around for a very, very long time. And whether it's Lloyd's of London or the Stock Exchange, you go back and you see buildings and institutions in the city that have been operational for, in many cases, centuries. And these institutions have been forming an essential part of the British economy for centuries. They've not been just hanging around and making money out of thin air. So I think it's important to recognise, just to sum up, that it's a place where real value is created, real activities are taking place, and as I say, it's been around for a very long time. So long may it continue.
Thank you. And thank you, Abhishek, for sticking to time. Duncan.
Hello everyone. I'll just start with a quick anecdote. I think the first time I went to the Conservative Party conference was in 2003, and I distinctly remember it was a Blackpool conference and going to a TFA event that Christopher Gill was speaking at. So it's nice to see the Freedom Associations going from strength to strength, and nice to be finally addressing an audience here. As Mark mentioned, I worked in the City of London for two quite large city law firms, and the chapter I've written is in relation to the city legal market. And we've heard a lot recently about global races and David Cameron's obsession that the UK must be leading the global race. Well, I think it's really important that someone needs to really champion city law firms, because I think this is a sector where we genuinely are winning the global race. 4 out of the top 10 law firms in the world are headquartered in the City of London. And I would argue that it's very hard to think of another sector where the City of London is actually ahead of the international world to such an extent as that. If I just zone in on those firms, I mean the 5 firms commonly known as the Magic Circle firms, in 2011 had a combined turnover of £5 billion. They are global leaders. Clifford Chance, headquartered in Canary Wharf, has 34 offices in 24 countries. Linklater's 27 offices in 19 countries. Freshfield's 25 offices in 15 countries. I could go on. But these firms make a great contribution to the UK economy and have a real dominance in Europe as well. The UK legal market in 2011 contributed 20.3% of the total European legal market. So we are ahead of pretty much everywhere else in this area. This is a sector the UK, and specifically the City of London, is leading in. And I suppose really why I want to talk about this is I'm concerned that politicians aren't really getting this, and they're not really understanding just the success that this sector is making. And as I say, I've worked for city firms, and they often get a bad press. People work very long hours, the sense that partners are just creaming off the profits or whatever. That's the perception. But actually, when you go inside any of those firms, they're communities in themselves. They have there's people from all different walks of life who work there. We often hear about partners of city law firms. There's actually secretaries. There are people working in the print rooms. There's people working in the canteens. All these people are part of the organism that is really making the UK economy an absolute leader in this sector. And I think it's about time someone in politics actually banged the drum for these firms and the amount they contribute to the British economy. 37,000 solicitors are employed in the top 200 UK law firms. That's a lot of people. That's 43% of the number of solicitors in private practice in only 200 firms. And these are firms that need supporting, in my view. They do have threats from regulatory issues, aside from the perception issue, which I've just mentioned about, that goes part of the banker culture, which Mark mentioned. There's the threat of a transaction tax, which I know the Conservative Party is not keen on, rightly so, but Labour a bit less, a bit more ambiguous on that. That would really damage a lot of the corporate finance work that goes on in city firms, which is sort of bread and butter of a lot of those city firms. As I say, people do work quite long hours in city law firms, but they buy into that culture and they get paid handsomely in return. And there's a possible threat, obviously, a more left-wing government could introduce something like the Working Time Directive, which would be very bad news. I was a banking and finance solicitor doing asset finance work, and part of the reason I actually got made redundant in 2009 was probably because of the state ownership of banks. A lot of the work that I was doing dried up when the state took an investment in some of the banks that we know about. So in order to help these law firms expand in the future, I think that has got to be a priority, getting that state ownership of banks dispensed with as soon as possible. And also, there are challenges on issues like the taxation of LLPs. I won't go into too much detail on that, but in the book it mentions that. And there are threats as well. A lot of outsourcing is going on in city law firms, particularly at support level. People being outsourced to India, South Africa, etc. And there are redundancies. And I just think it's so important that UK politicians need to start supporting this sector a lot more visibly and making the case for why city law firms are positive for this economy and not just seeing the negative, seeing the positive in terms of what they do for society.
Thank you very much. Anthony.
Thank you. Well, my chapter focuses on fund management, and I've got 4 key points to make. First is that, in my opinion, Britain needs a healthy fund management industry. It's a vital source of economic growth. What it does is it channels capital from where it's in abundance to where it's most needed. in the real economy. It's also a big source of employment and tax. In fact, financial services as a whole generate 12% of the British tax receipts. That's a very large number from only 3.5% of the workforce. So that ratio is very attractive if you're sitting in number 11 Downing Street, I think. In terms of value, I think it's good value for money, because if you take that 12 billion pounds of revenue that the fund management industry in the UK generates a year, which incidentally is just over half of our second largest manufacturing sector, aerospace. So that 12 billion, if you then divide that by the asset base of the fund management industry in the UK, which is 4.2 trillion pounds, you're looking at a cost of 29 basis points, or 0.29% a year, which I think is pretty good value. The second key point, I think, is that the British fund management industry, and actually all fund managers globally, are being hit by a tsunami of regulation, which has emanated from the global financial crisis. And this regulation is coming at a huge cost. And eventually you'll find that cost is already feeding into the prices paid by the end consumer. We're all consumers of financial products, anyone with a pension is. So, is that regulatory wave being best directed? Well, my argument is probably not, because some of it's politically motivated, I would argue. Bearing in mind that Britain has a market share in fund management in Europe that is more than France and Germany combined, our ability to direct traffic, if you like, in terms of where that regulatory wave is hitting is very poor, given that our market share is so high. And the other thing, obviously, is it's very expensive to implement this regulatory wave, and you have to hire huge numbers of lawyers to take account of it. And it's multi-dimensional, and it's very expensive to say, and that cost is passed on to the end consumer. It also has the negative effect of raising barriers to entry. So the last time there was a global fund management firm launch in the UK was in 2007, and that's for a very good reason. It's just so difficult now from a regulatory compliance and cost standpoint to launch a new firm. That's bad for the consumer, because the consumer has less choice at the end of the day, and you end up with a sort of big oligopoly, if you like, and the risk is that you end up not having the best risk reward, if you like, for your consumer, which is everybody. But the other point is that is culture. I mean, the key point is that the regulators are kind of like the referees in a football game. I mean, they're the referees of the financial service industry. They should be busy enabling a culture of transparency, where there's a direct as possible link between wealth creation and the returns that are generated for the end user, the investor. And that isn't the case at the moment. The third key point is that hedge funds. Right? Hedge funds are the kind of vultures, so-called vultures of global finance, and they're constantly portrayed as being sort of somewhere between being evil and the causes of the global financial crisis. I mean, it's not true. Fund management did not cause the global financial crisis. And they're also not a systemic risk to the British financial system or the global financial system. And I can quote Ben Bernanke, who's the soon-to-depart chairman of the Federal Reserve, saying in 2009, so that's the year after Lehman's went bust, to the US House of Representatives Financial Services Committee, he said he would not think that any hedge fund or private equity fund would become a systemically critical firm individually. So there you have it from the Fed chairman. So hedge funds didn't cause the global financial crisis, and they are an unjustified, in my opinion, bogeyman for left of centre politicians and commentators. And the fourth point I'd make is the Asian threat, where I live in Singapore, to the city is real. And you should not underestimate the determination of competitor cities and countries like Singapore, Hong Kong, Shanghai, Dubai, New York, and others to want to grab market share away from the UK and from London. It's a real threat. And the reason particularly why it is a real threat is this issue of clustering. So very briefly, so if you create a deep and wide enough talent pool in financial services terms, with brokers and traders and bankers and accountants and lawyers, and then you add in sufficiently attractive physical and IT infrastructure, and then you have a low tax rate, you can very quickly create a very competitive environment. And the financial services industry is asset light, so the people, the most important people, leave the building every night, and you hope they will come back in the morning. They're very nimble generally, and will move and are moving to other financial centres around the world because they see a better opportunity. That's what it boils down to from an individual perspective. And we have to be very careful that London doesn't wake up in 10 years' time or less and find that London's lost its position as a leading global financial centre, which sounds like scaremongering, but sitting in Singapore, and if you look at the changing skylines, Singapore, Hong Kong, Dubai, Shanghai, that is a good testament to the ambition of these financial centres to grab market share away, and it's a potent threat, so I really wouldn't underestimate that. The last point I want to make for a second is our obsession with Europe comes at a huge financial cost, in my opinion, and you can see that across a number of sectors and areas. But the bottom line is that we are missing out as a country, we have done for the last 15 to 20 years, on the highest growth areas of the world, which are in the emerging markets. And if you look at where the next 1 billion consumers globally are coming from, none of them are in Europe, pretty much. 90% are outside Europe. And if we as a country don't aggressively and somewhat ruthlessly aim to build up our exposures to BRIC countries and emerging countries, and actually a lot of Commonwealth countries, India, Canada, Australia, South Africa, Malaysia, Singapore, where we have arguably an edge because of our history and probably in many cases similar level of common law history and language. So we should be taking advantage of those countries and our relationship with them, and instead we've been ignoring them. So we, I think, export 4% of our exports go to BRIC countries. That's outrageous, and it really suggests to me that the political class has been asleep for 15 years on this, because that ratio is seriously out of whack. And if we can't attack these generate market share in these high growth emerging countries of the future, we won't be able to afford to pay for our national health service, education, etc. So it's a very serious game, and I think we're not really doing enough. So that's my last.
Thank you.
Thank you very much.
Alex.
Thanks, Mark, and thank you as always to the Tremendous Freedom Association for having us. The sharp-witted amongst you will have noticed there is a slight difference between the title of our book, In Defence of the City, and the title set for us today at the session, City Fiddles Whilst the UK Burns. And as your last speaker, I shall seek to seamlessly weave together those two ostensibly different ideas, making 3 points. So one, this is what the city does well, a second point about what the city does okay, and thirdly, an argument about what I say the city does poorly. First of all, what does the city do well as a policy? And it builds well, I hope, on Anthony's point about our obsession with Europe as a nation. Immigration is a policy that the Square Mile has seized on rightly and critically about central government of both colours in the last 10 years. Firms based in the city, and I mentioned in our book, priced very competitively and available outside, I mentioned in the book some of the firms that are in my ward within the city. Major multinational institutions, headquartered here in the United Kingdom, multi-thousand members of staff in the UK, and they go to the UK government and say, we've got a deal coming down the pipe which involves a significant, non-trivial amount of money, millions or billions, from, say, Singapore or Hong Kong. And we need to bring a team over to deal with that. And the UK government will say, okay, you can apply on a yearly or a 6-monthly basis for tickets for immigration people. You've got a headquarters of 7,000 people, you can bring 4. You can bring 4 people to the UK as their sponsor. And after that, you can negotiate over individual slots you might want to have on top. This is just mental. And quite likely the city campaigns against it. That is to say, this is the best kind of immigrant you might want. high tax paying, they're coming guaranteed by their firm, and their behaviour will be undertaken. They leave at the end of the stint because they're based back in their market, and if they choose to stay here whilst after the deal is done, they're going to pay through the nose, both for the immigration process and then to pay UK tax on top. Exactly the sort of person, high skilled, exactly the sort of person you might want to attract, and exactly the sort of person our current scheme is set against. And rightly the city campaigns against that. Naturally, in part, this is a reflection of Anthony's point about our obsession with the EU. We have made it harder to come to the United Kingdom if you're from the United States or Canada or Australia or New Zealand or for South Africa. That is to say, if you're Anglophile and you probably speak the English language in the first place, there's some kind of cultural commonality and strong national links and ties. And easier if you come from Bulgaria or Poland or Italy or France or Germany. Now, it's a slightly separate point because what the government's seeking to do is clamp down on the bit of benefit of immigration it can control, because it's failing hitherto to deal with the bit of immigration that it can't control. But nevertheless, it's still relevant to this discussion, because at the top end, there are firms doing business which is innately international. It comes into this country and out again because we're good at it, but there's no guarantee that it has to be that way. It could go to another financial sector, and there's nothing that the Germans would like more than to have this business in Frankfurt. There's nothing that the French would like more than to have this business in Paris. But if the government carries on bullying people and stopping them from coming to London, then notwithstanding the fact that individual workers like to be here, and notwithstanding the fact their families like to be here, then in the end, the financial rationale will mean they won't come. So rightly the city campaigns on that. That's the good. I'm afraid it goes downhill from here pretty quickly. Because secondly, I said the second one was going to be okay, for the interest of framing good, okay to bad. In reality, it's not okay, it's pretty bad. The city's positioning on the EU. Now, I say that it's okay because the city realises this is an innate threat to itself. With the transaction tax and so forth, if we allow these things to go through and affect the UK, then we'll be squeezed out of business, and business will go to a place like Anthony's home. Now, I'm always proud of the fact there are more German banks in London than there are in Frankfurt, there are more French banks in London than there are in Paris. But again, it ain't necessarily so, and moreover, and much worse, the city's default setting, and I know I'm being recorded now, but the city's default setting amongst our officers and our leadership is innately Europhile. You will often see voices from the City of London, elected and unelected, saying things that members of the Conservative Party would find anathema to your views, whether it be about sovereignty, whether it be about regulation, whether it be about the future of Britain's position as an independent country. Now, there comes a time, and I've been elected now for 3 years, there comes a time when you stop being an outsider and you start being an insider. That is to say, there comes a time when it stops being someone else's fault and it starts being yours. Now, I hope I'm not there yet, and I can still criticise the leadership without it being too much my fault. But we're sort of getting there in taking a more Eurosceptic position, but only because of the remarkable and blatant anti-British position often adopted by our European cousins. And all things being equal, the default setting within the city, because they're decent chaps who like to rub along and like to get along with people they meet in committees and have nice conversations with, that is to say, exactly the Europhile trap that we've faced in every other aspect of policy over our lifetimes before, they'll just slip back into being friendly Europhile people. For the time being, because the transaction tax hangs over the head of the city, and a tax like that, and particularly on things the city does best, so you'll see a remarkable affinity between the things the city does well and the things that the EU seeks to regulate. That's a remarkable correlation, in my view. Because of that threat, this is something the city does okay. Generally, it's slipping towards poor. What does the city do actively badly? Tax and profit. The city will actively to champion low tax, and it will actively to champion high profit. And this is something that almost no one in the city seems to be willing to do, despite the fact that it's one of the global centres for this sort of activity. Tax. If the city's not going to speak out against tax and encourage lower corporation tax, and against lower or abolishing national insurance employer contributions, a tax on jobs, who else is going to? If it's not the city speaking out on those issues, then who else? There's a real failure in leadership from the square mile on that. But secondly, and perhaps even worse, because it's such a difficult issue for others to champion, and such a cause that goes unspoken for, profit is good. Profit drives innovation, profit drives investment, profit drives hard work. And the place where that happens most and most ostentatiously is in the city. So if the city doesn't speak up for it, if the city doesn't defend the idea of making a buck because you've invested, or making many bucks, cheers for profit, cheers louder for big profits, then no one will. And the sort of self-flagellation that you see amongst most business people, seeking to apologise for running a working business, seeking to really apologise for running a successful one, it's a culture we've got to get out of, and the city should absolutely not be encouraging it. But at the moment, I'm afraid we are. So I hope that pins together both the defence of the city and an idea that the city is semi-fiddling whilst the UK burns.
Alex, thank you very much. We've got